Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep on Sunday, May 11th for the start of the day, the start of the week. Beginning Monday, May 12th. And so what I'm going to be doing here for this is kind of like a late start to ticker request live. What I'm going to do, I've got the chat open so you guys can post requests there if you have them, but I can't see it right now because I'm going to go through these tickers that are listed on the thumbnail as well as in the description of the video, just kind of giving my normal pre-market prep overview. I just have to be at work tomorrow in the morning, so I can't do it then, and I would rather do it live and get some feedback from you guys, get some requests from you all. So it might take maybe about 20 minutes before I get through this list and really just looking at kind of broader market type stuff. Seeing where we might be starting the week off, and then, whether it's bearish or bullish sentiment, we can kind of, apply that to other tickers. And I do have a list of the tickers here in front of me, as well as some that were mentioned in recent comments. So I'll be happy to go over those if there aren't any requests. I will just begin with what I normally begin pre-market prep with, which is the UVIX, which is the 2x long VIX futures ETF, which closed on Friday at a price of $38.12, but in the overnight, it is down about 7.5%. And it's currently trading around $35.20. I can't look at the overnight data here. I will flip over to look at the VIX in TradingView in a minute, but I just wanted to go over the chart here since this is where I have all of the drawings. It's not really too surprising to find out that the volatility index is down over the weekend because we have seen Bitcoin and crypto ripping over the weekend. We also are likely to get news on a Chinese trade deal or a trade deal with China tomorrow. I suspect it will be underwhelming, but I also think that the result from that is priced in now, so maybe we will see a pullback. Maybe volatility would spike up from there. Looking at the chart here, looking at the daily, we can see this kind of channel that we have been trading in that I, was monitoring these basically 2-week cycles, whether it goes up or down. And we did recently break out of it, hitting a high of 105.18 on April 8th, and this was, right around kind of the tariff wars and the, I forget not the Independence Day, but I forget what Trump called it, but, regarding tariffs and stuff. And so we saw this big spike in volatility, and so I kind of stopped tracking the 2-week cycles because it just seems like we're in kind of a different regime above this parallel channel marked by that light blue line. And so I was thinking, I talked about this in prior pre-market preps, that, right around $40 seems like it might be a nice dip buy level, or maybe coming down to around $36.90, just having fun, with the 69 in there. And we're below that now in the overnight, like I said, at 35.20. We are breaking lower, and maybe we get to this green line here right around 30. I do have an alert there. But what I have learned in the past is that if something is, dropping off, falling off a cliff, wait to see if a bottom is formed before going heavy. And so I happen to have about 3 shares. My average is right around $40. And, I plan to add more, but I'm going to wait to see what happens tomorrow. Maybe we dip down and bounce. Maybe we don't. And so, maybe this is coming down to 30. Maybe it's coming down to 25. And, getting back to trading in this parallel channel. We will have to see, but maybe we get a rejection and a bounce, and then there's still some upside potential, like from where it closed at on Friday. Just mentioning this real quick, just getting up to that yellow line at around $44.50. That's about 13% to the upside, and then about 40% to that orange line there, around 54. So, I think that there's a lot of upside potential, but there might be some dips in this in the meantime. And so real quick, just going to look over at the 10-minute time frame, which is actually probably not that useful considering that we're looking at the overnight. So yeah, maybe I won't spend too much time on this, but we could just see that it faded down on Friday's pre-market, dipped, bounced, kind of consolidated throughout the day and into the after hours. Unfortunately, I don't think that I can see the after hours trading here, but maybe I can. Overlap volume, futures contracts. Let's see. I'm pretty sure that there is something on here where I can do the overnight, but yeah, I'm not going to mess with it now during the lives. Overnight, here we go. And so maybe that is, yeah, kind of revealing that we see this drop off a cliff coming down to $34.89 in the overnight trading. What I think is probably going to happen, really just like relating to Bitcoin and crypto, we formed a CME gap over the weekend. I suspect that we will be seeing a gap fill in the early part of next week. And with that, we could be seeing a retrace of the UVIX back to these levels, but maybe not. Maybe it falls off a cliff because maybe the S&P 500 and the stock market in general really takes off. So that is something to consider just for us to keep our eyes on. But yeah, I mean, this has always been, you know, a nice one to slowly, casually accumulate. I enjoy it a lot, but, you know, it works for me. But I, of course, could be wrong, and maybe this tanks down to 25 tomorrow. Who knows? But let's look over at the VIX real quick. These are some similar levels that kind of correspond to what I have drawn in the UVIX, this horizontal line here at 2376. That is based on the high from September 6th, very similar to this high over here, September 6th. That is when we started this downtrend here of resistance. Top of that parallel channel, because the UVIX is an ETF that tracks the index, the market volatility index, that there are reverse splits with this because of contango, so it tends to fade down, whereas the market volatility index can stay kind of flat. And so this did close on Friday at a price of $21.90. I don't see futures data here, but I can pull that up in TradingView. And so what we can see for the VIX here, looking at the daily, this is where we closed on Friday at that price of, it looks like 21.94. So it's a little bit different than what I have over here, but that's just going to be depending on the exchange and whatnot. But what we can see with the VIX is that we're gapping down and dropping down in the futures trading, the overnight trading. Currently, you can see it just above me. It's around $21.13. I would expect this to potentially find some support around 20, because that is kind of like, you know, the level that signals, you know, whether or not this is, you know, a volatile market. And so thinking about that, you know, the cursor is right around 19. I'm just thinking about like the highs over here, the pivot low over here. That's around 19. So I might just draw real quick, just one line going across. Let's see. Corresponding with, I might do it with the high from August 12th of last year. So we can see we kind of traded around there, got a lot of consolidation there, got some rejections over here. And, you know, then over here, this is why I picked that level. There was, you know, this low on April 2nd of last year. This hit at 1925. And so I've got that level marked at 1934. Maybe that's where we're headed. So I would brace for that. I would brace for a pullback in the UVIX to wait to see where it lands. And so I'm just chilling with that. I'm not doing anything with it. Small position, so no big deal. But I did actually have a limit dip buy for one more share at 36.90, you know, corresponding with this alert here. I decided to remove it because I thought it was going to be gapping down. I want to reassess. I don't want to be chasing. And so I kind of learned some hard lessons with that with SVIX, which is not 2x leveraged, 1x, so not leveraged, short VIX. And, you know, I was buying the dip too aggressively with that when this was going up. and because it's inverse to this basically, and that was not so great. But yeah, anyways, that's enough of the volatility. I don't know how interested in this stuff you guys are, but just kind of giving my perspective as we start the week. I think that the volatility will be pulling back, and I think that the S&P 500 is likely to be rallying. And so we didn't really get a gap fill here. That is at a price of $554.54. That was the closing price from April 30th, that blue dashed line there. So I was expecting that to maybe get filled, test this orange uptrend, which I believe goes back to the lows from April 19th over here, and also got retested that level as a pivot low on August 5th. Pretty notable level. So I thought that we might be retesting it before going higher. It doesn't look like that's the case. In the overnight, we are up about 1.38%, or around $7.78. And that is going to be higher than the high over here. So I could see that continuing up, maybe getting to around 580, 582, somewhere around there. That red line, which corresponds with the low from over here, November 6th, that was at a price of 581.68. And that level, as you can see here, when we were in this range at the top, we were distributing effectively is what that was. We were testing that as support multiple times. Got, like what might be viewed as a spring here before launching higher. But then once we did break above these highs here, we couldn't hold them. And that really just suggested a lot of weakness, or that, we were going to be pulling back. And that is what we saw. But yeah, I could see this going up higher. I would not be surprised by that. And then looking over at the 10-minute time frame, this is going to include the overnight trading. We can see here that from, let's see, Friday's after hours trading, it just, let's see, I'm not really used to looking at this with the overnight, but from Friday's after hours trading, wait, that would be over here, sorry. We just kind of held where we were at, more or less, had dipped down to this previously filled gap around 564.50, and held above that, but then gapping up here, hitting a high of 572.66 in the pre-market. But I could actually see a little bit of a pullback, maybe corresponding with Bitcoin, before this then either continues higher or does not. I suspect that the news that we get, I think Scott Bessent is going to be talking about the tariff deal, or the trade deal with China, that I believe they're still negotiating it, but the progress they made with it, I think that will probably be priced in, and maybe we'll see a little bit of a pullback. So I'd be prepared for that. And if we do pull back, I think maybe 566, 567 could be acting as support. Which looks like, it just corresponds with like the highs over here, and not the wick highs. I think it's important to note, this is something that I actually realized doing Crypto Corner, is that rather than putting a line at the highs, you don't get as much overlap. If you put it at the consolidation highs, you get an overlap with the wick here, and also this candle over here. That's just going to be, more notable, whether it's support or resistance. So I think that's good to be paying attention to. And I don't know that I mentioned it. The SPY, the S&P 500 tracking ETF, closed on Friday at 564.34, down 0.13%. But like I said, overnight up over 1.3%. So I think that's probably going to be going. I think that the bear market's over, or maybe not. Maybe this is just a continuation of a bear market rally. But I think that we could be seeing new all-time highs later this year in SPY, S&P 500, SPX, which is the S&P 500 index, which closed on Friday at $5,659.91, being down 0.007, or negative 0.07% on the day. No after hours or overnight trading for this, but I can pull that up in TradingView. But really, we didn't test this gap, just like same with the SPY. We got close to filling it, but we didn't get to it. And I think that we could be heading up with this one to around $5,865. But yeah, let's pull this up in TradingView. I'm just trying to, I don't have a paid account with them or anything yet, but I'm just trying to get a little bit more familiar looking at the data here. And so I guess I'll do the top one, or no, I'll just do this index here, CBOE. Let's see about that. This is, let's see, do we have This is from Friday, so I don't want to be looking at this one. Maybe I'll just do this S&P. No, still, there's nothing on that. Maybe it needs to be futures. Now let's try this one. Yeah, it's still red. So, nothing too exciting with that. So maybe I want to do S&P 500. SPX. I was just looking at this. Maybe this is what I want to look at, the ES. I believe Gareth Soloway looks at that, and that does say futures. That's the mini, though, but he does look at that. And so what we can see is this gap up, currently trading around $5,755. Maybe that's going to be bumping into some resistance up here around $5,830. So we could be seeing a pullback. So good to be prepared for that, to brace for that possibility. But now that I've gone over those tickers, I'm going to go over crypto real quick, just the top 3 that I like to watch. Bitcoin currently trading around 100, just below $4,000, $104,000. And I actually just recently saw a post from somebody on X, maybe Bitcoin conference, I'm not really sure, about 105,000. And then I checked on my phone and saw, oh, it's actually below 105,000. That was short-lived. And last week during Friday's pre-market prep, I drew this yellow box suggesting that I think that it could be consolidating here below 108,000. That be potentially the formation of a bull flag based on this 100% Fibonacci extension going from the low over here from April 15th up to the high hit on May 2nd and then pulling back to the low from May 6th. And I should note the data here is in Webull. This is the daily. Because it's Webull, it's not TradingView. I don't trust this data as much, but this is just where I do a lot of my charting. And the CME gap that I had mentioned is down here at around $103,000. So if we do pull back about $1,000 more, I would not be too surprised by that. And if that did happen, that would maybe be, a green flag for this to go higher to test that 100% level up there at 108. But yeah, generally for the rest of the year, basically I'm bullish on crypto. But I also find it really interesting because, while it was down over here, I feel like it's really just tough to be bearish on Bitcoin, especially in this year, the 4th year of the, 4-year cycle, the end of the bull market. But there were just so many people bearish on Ethereum over here at the beginning of April when it hit around 14,000. And so I've talked about this kind of extensively, during these pre-market preps and then also during those crypto corners. I don't really want to exhaust it, bore you guys, whatever. But, in the chart over here, which I then translated into TradingView, I had noticed these pivot lows that, I was thinking that, hey, over here, we might be finding that as support. And that was in March. But then we broke lower. And then I started to think, well, are there any levels that could be suggesting maybe this is a fake out breakdown or a spring before launching higher? And what I noticed is this green uptrend here based on the pivot highs from the, looks like, let's see, 2019, and then the pivot lows over here from 2022. And that happened to intersect with the highs here from the end of 2017. It looks like this week ends 2018, but really I believe the high was hit in 2017. Those levels corresponding with 1400, we did dip to that. And so I started to think, well, maybe that's a great time to buy. Everybody's super bearish about Ethereum. And we really kind of took off. Did find a little bit of resistance here around 1800, but then we have launched, hitting a high over the past week, over the past few days really. Let's see, looking at the daily chart of, looks like 2600. Maybe that's just the Webull data and that's not seen in other exchanges. But again, that's like a wick high rather than like the consolidation high based on the candle top here. That would be around 2500, let's say. There have been so many people bearish about it. I just saw an interview on Scott Melker's channel. He has been talking about buying the dip on Ethereum, but the person he had on said that he's bearish on Ethereum. And I just find it pretty hard to believe that, from the lows over here, Ethereum's up 83%. And just from the past few days, or actually, I'm going to remove my drawings for a second. Over the past week, this weekly candle that we just closed, Ethereum went up over 38%. Let's do a comparison with Bitcoin. Bitcoin went up 8.6%. So yeah, I mean, I feel like a lot of people are missing the message on Ethereum. And I think that there's just great opportunity down here. And just the fact that USDC is a stable coin that is either a layer 2 or an ERC20 token, whatever it is, it trades, it's built on Ethereum. Stablecoin bill passing, if that does happen, stablecoin legislation, that's going to be bullish for Ethereum. We also have tons of other coins that, I'm really excited about that are on top of Ethereum. So I just think that there's great potential. There's also an ETF in Ethereum. And so the guy in the Scott Melker video was talking about how, he doesn't think there's going to be an alt season because all of the money is consolidated into Bitcoin because of the ETFs Wall Street has exposure to, but they don't have exposure to meme coins and, whatever else, the shit coins. But they do have exposure to Ethereum because there is an Ethereum, there are Ethereum ETFs. And so I just think that guy is totally missing the point. He talked about at the beginning of the year thinking that alt season would start. It didn't happen. Just because there's a lot of money from Wall Street into Bitcoin, that doesn't mean that there aren't degens in Bitcoin that will be rolling their gains from Bitcoin into altcoins, sparking alt season. Wall Street's money might stay in Bitcoin, so this may have a more sustained rally. There might not be blow-off tops like there have been in the past. We may not see such retracements like we've seen in the past. So I think that's what might change about the Bitcoin and or crypto cycles. But I still think there will be alt seasons. Maybe those won't be as impressive as they were in the past, but I do think that Bitcoin could be heading up definitely to 120,000, maybe 200,000 by the end of the year. Ethereum, I've talked about this going to 8,000. And Dogecoin, I'm wondering if this will get to $1 or maybe if the alt season is muted, Bitcoin is at or near, it's near approaching all-time highs. Ethereum's not, Doge is not, so there's definitely a lot of room for these to run. So the alt season may not be impressive as it is in the past, but for Doge to get back to its prior highs, that is, let's see, I'm just going to flip this over to the weekly. I'm not the greatest with mental math, so I'm just going to do a quick little measurement here just so we can see right around where we're at up to those prior all-time highs. That represents, 200% move to the upside. That's pretty nice. And if this goes to $1, that is, more than 4x from where it's currently at. So I just think that there's a lot of great potential. And look at Doge. I was just talking about Ethereum. Sorry, I'm all over the place. But just switching over to the weekly, how much did Doge go up over the past week? 36.7%. So like Ethereum's trading like a meme coin. I think it's hard to believe that people are not bullish or excited about Ethereum and the potential. So many people are bearish on it. It's insane. That's the time when you want to be accumulating, not when everybody is screaming about everything going to the moon. We're not there yet. I think that there's still a lot of upside potential with these, but of course, Doge is going to be more risky, currently trading around 23.5 cents. Whereas Ethereum is still around 2,500. But anyways, let's skip over to the next tickers that I have. I'm just going to do a little bit of commodities, then go over to one ticker that I'm really interested in, and then I'll open up the chat for you guys to make some requests. And so the next one that I wanted to go over was gold, largely because, I did have a short position in GLL last week. I've actually traded it a couple times. But unfortunately, I believe this is down in the, if we look at gold in I think that GLL is up. This is ProShares Ultra Short Gold. And so by ProShares Ultra Short, let's see, I believe that's going to be 2x to the downside or inverse of gold. And so I've traded this a little bit, not currently holding it. I did sell it on Friday, didn't want to be holding it over the weekend because I'm trying to get better at swing trading. This did close at 11.02. I was hoping for it to get back to the closing price from, let's see, this is the daily. The closing price from Thursday, which was at 11.16, that didn't happen. Maybe gold rallies over the weekend, Bitcoin's rallying, so, maybe. But maybe not. It seems like it's a more risk-on rally rather than a risk-off rally, so gold is pulling back. And so this would, I suspect, will be above 1102 tomorrow. And actually, there's no overnight trading here on this. It looks like it doesn't show it. If I do look at the 1 hour time frame though, or the 10-minute, let's look at that. Yep. This is just the after hours from Friday, so no overnight trading with this, but we can look at gold, the commodity over here in trading view. So let's pull that up. Gold, I'm going to go with Capital.com. I guess I've done some drawings on this. And yeah, we can see that this is pulling back for Monday, May 2nd. The futures here pulling back about 1.63% since that was 2x in the GLL. That would be about 3% to the upside. So from the close, I'm just going to take a measurement from there, see where this would be taking us. That would be taking us to about that 618 there. That is around $11.35. So yeah, I suspect that gold, GLL, the ProShares Ultra Short Gold, will be up to that level. This level here may be getting up to filling the gap here, which maybe I want to draw a line across there. So yeah, I should have held it over the weekend, but I was glad to take profits and to lower my risk. I think that's really important to be doing in the market that we're in because it is a volatile one. One day. Less than one day, and things can completely change. But yeah, so 1172, I feel like GLL could be heading up to there. And so from where I sold at actually 1101, I believe I had a stop loss and that got hit. The low on Friday was 1089, so I could have lost more, but getting up to fill that gap, it's about 6% to the upside. Maybe that's not huge. Gold is not necessarily too exciting, especially with this being 2x. But that's a nice way to make, just to have a trade. I am not currently in that, like I said, and gold over here is trading around, it looks like 3,272, if that's right. Gold over here, there's my doodles. So, yeah, but maybe we just consolidate under here. I don't really know, but this did look like it was forming. Let's see. No bearish divergence because we have lower highs in the commodity price, also lower highs in that RSI. But with attempting to get back to those highs, so this is like the consolidation high. So forgetting about that wick high, just looking at the candles, we got back up to that level, but we had lower volume behind it. So that actually, the volume there suggested a little bit of weakness in my view. But then let's flip over to, I'm just going to do it from here. Natural gas, that's one that I also wanted to follow up on. I don't have a boil, which is 2x leverage, or cold 2x leverage short position on natural gas. I don't have either of those. But it does seem like this could be getting towards a top. What do I have drawn here? This is a Fibonacci retracement. I actually don't think that's really going to be that useful, but what I think is probably more substantially useful, you can probably see it. I don't even need to draw a line, but we can see this dashed or dotted red line going across there that bumps into this support over here. We bounced from that, tested that, and then ultimately broke through it, consolidated a little bit below it, but we are trading above that now. But yeah, bumping into this prior support, that's going to potentially be resistance. Also some support over here. So yeah, I think it might have a tough time going higher. And one thing that I've noticed with natural gas is if the market goes higher, and maybe I'm wrong about this anti-correlation, but when the market goes higher, natural gas tends to go lower. So if the S&P 500 stocks, risk assets are going higher, we might be starting to see a pullback on natural gas. So maybe it's a good time to pick up gold, but I personally am not planning on picking up a position with this, at least not yet. I tend to follow kind of, what Gareth is talking about, Gareth Soloway with natural gas. And yeah, this is just, it's the Widowmaker. And so if basically he'll talk about starting to build a position, and then it's like, okay, I'll wait for it to go a little bit up more or a little bit down more, and then maybe I'll consider it. But yeah, I mean, I just see this potentially pulling back down to around 278 or this white uptrend based on the lows over here. And so I think that could be a really nice time to start building a position to the upside. And then also, I think this is something that Gareth Soloway probably talked about. Fibonacci retracement from the top here to the bottom here. And if you're wondering, that is where I, got more familiar with Fibonacci retracements, is from watching his channel. So I'm just going to line this up approximately with the top there, pulling down to the approximate lows that we hit, over here. And what we can see is we did get a bounce to around the 50%. That is around $4. This is currently trading around $3.90. And so what I could see, because it's the Widowmaker, because it always goes higher than we think or lower than we think, whatever, the opposite of what we want it to do, I could see this going up a little bit higher to around 420, and then maybe up there. That would be a good time to maybe pick up a short position with cold. But right now, I am not even going to talk about boil or cold. Let's see, I've got boil here. This is the 2x leveraged long natural gas ETF, and then cold 2x leveraged short. So maybe I would pick this up, but that would be based on if natural gas over here comes up to around 420. And if that happens, then maybe I would go long cold, which is 2x leveraged inverse the natural gas. So that is that one there. And then I just also, wanted to cover ticker symbol URA, which is the Global X Uranium ETF. I talked about this potentially, I guess going a little bit higher, maybe to around 28. We are in the overnight. Let's see, flipping over to the 10-minute time frame, gapping up to around 2760. I think that this could be getting near a top. There has been a lot of talk over here that we can see Trump considering executive order to speed construction of nuclear plants. That's coming from the New York Times, apparently being reported by Seeking Alpha. And then also, Canada clears construction of small modular reactor in boost to nuclear industry. I think that nuclear is just going to be really, really important for the U.S.'s future, the global energy economy. And so I just think there's a lot of potential with this to continue higher, but maybe it's starting to bump into some resistance around 28. And I just have that kind of doodled out there. But, is that based on a Fibonacci retracement? I'm not really sure. So I'm just going to do it from the highs here down to the approximate lows. And we can see that level going across. I'm just going to make that level light blue so we can just see it a little bit cleaner. And the level up here, that is the 786. That's at 30. That's maybe where we're going to get headed towards, where there's a gap that needs to be filled up there. But, I'm talking about potentially having some resistance right around where we're trading at in the overnight, around 2780. That is the 618. So maybe we get rejected from there, pull back to around $25, $26. Really $26. It says $25.93. Finding support there before continuing higher. And I will just mention Oklo real quick. This is up to around 29.11. I have a small position in this. And I could see this going up to around 30.91, which is based on, not the wick high, but kind of, the candle high, the close that we did form in a gap, actually. So maybe I should draw this correctly in my style as a dashed thick blue line to the upside around 30.91. I think that would act as resistance, and I am actually just going to open it up real quick on my phone just so I can get some perspective on this. So, being transparent with you guys, I have 5 shares at an average price of $27.52, so I'm in the green based on the close on Friday, 28.09. I do have a sell order for 3 of those shares at 30.27. Another sell for one of them at 30.02, and and I might change these. And then I have another sell at 55.03, which is going to be up here, and that's some percentage. It's probably a 100% move for me. So yeah, I think there's a lot of upside potential with this. I do plan on trimming out here, but I do, apparently plan on holding for the long term. because I really like nuclear a lot, and I think that there's also kind of a nice retail community around Oklo with Bronx Viking posting about it. And then the final one on the list, I'm sorry this is going on for 35 minutes, that's crazy. I just wanted to go over Wolfspeed. I've talked about this previously in the channel, and I previously had a call, which I'll talk about in a minute, but on the upside move over here, probably on the 28th, maybe over here, I'm not exactly sure which day it was. I did post about it, so we'll go over that. I sold. And I got out, and then right after I sold, I saw somebody posting about Wolf being excited about having bought at, I believe, 360 chasing. There was opportunity to exit up here, and what we can see here, this level going across here at 470, that is based on, let's see, is that the open price? Yes, from April 29th. I'm going to draw that as a red line because that looks like it's a level of resistance. Because we did get a couple wicks to get above that level. Excuse me, but we didn't get any closes above it. And with the attempts over here, what do we see with the volume? We did actually see a spike in volume here that was higher than the volume over here, but this was volume on a pullback. This was volume on an upside move, but could not get up to there. And then the next day pulling back. So yeah, it seems a little weak. And then there was a gap down. So on Thursday, Wolfspeed, ticker symbol Wolf, closed on the 8th at a price of $4.43 and then gap down to close at $3.28. I was not planning on looking at this again, but one of my favorite people on X posted about this, Mr. Chart Norris. So let's look at his chart, and we can look at it in the chart. Maybe look at some options data, because that's actually what I had. I did not have shares. I did have previously a $20 call that expires in January. And I sold it on the first pop on April 29th. So if we look at the data over here, that was when it popped up here. I exited on this red candle when it was up. I took 20% profit, I believe. That's kind of my style with options. And, because I'm new with options. I'm getting familiar with them. I've definitely made a lot of mistakes, but 20%, I think that's kind of a good trade. And then this pulled back. Did I re-enter here? No. I'm going to take a step away. I'm going to walk away. And so I sold at 55 cents, so $55 per contract. And that was about a 20% profit. But then it hit a high of 79 cents. Did I FOMO? Did I chase? No. I took profits and I looked away. I walked away. I didn't worry about it. And so those contracts are now trading at around 30 cents and may go lower before next bounce. And so I will have to cover in tonight's pre-market prep, which I am doing now. But let's look at Mr. Chart Norris's chart here, just to kind of see what he has mapped out. So there was this consolidation range over here. It looks like that would be I was just watching a free Wyckoff's or video from Roaring Rico about GameStop, and he really dove into the consolidation phases and stuff like that, distribution. And so maybe that looks like what we're getting here. This looks like maybe there's a left shoulder ahead, a right shoulder, and then we get a move down. And we can actually look at that in more detail on the chart, although this is, it looks like the 1 day, I believe. Is that what he said? Wolf daily candle chart. Yep. So let's look at this over here. So we can see that maybe there's, I'll doodle it out so you guys can see it, but maybe there's this left shoulder, head, right shoulder there. And if that's, if that's the case, we can take kind of, just approximate, but measurement from the top of the head to the approximate neckline to see where price might be finding a bottom at. So from the top of the head here to the armpit here, I'm just going to line that up with the midline. And so we can see that, we basically did that measured move. So the distance from the top to the neckline, taking that down from where it breaks. So that would actually be maybe, right up here or, somewhere around there. We tested that around 206 was the low. And yeah, following that gap down. So it's not, I was surprised, disappointed when that happened, but that was also dipping below this green trend line that I have drawn over here based on the lows from September 10th, as well as the lows from, that's September 10th of 2024. These are the lows from January of this year, January 14th. And so we can see that trend line acted as support, but then we dipped below it. And so I wonder if this was kind of like a spring, dip down, and now we're launching up. And now maybe this is a retest of, where we had gapped down to. And that's kind of, what Mr. Chart Norris is saying. So basically like what I have drawn here, but not going all the way down to that green line. He has it drawn where, we've got this basically cup here, handle, and then another bounce, spring, break below to fake people out, and then going higher. And he has that line drawn there at around 462. So that might be like a quick swing trade. And so what I was curious to look at actually over here, let's look at some contract data. So the one that I was holding, I actually removed it from the list here. Dang it. But what I can do is pull it up because it was the $20 contract. I'll just have to search here. And let's look up the expiration. That is going to be January 16th right here. Calls and the strike. I had 20 bucks. We can look at why I was thinking that. And then I'll just add this over to here. It's behind Ed, but I can pull up the data here. So I'm just curious if there's bullish data going on here. It looks like, net call premium increased, net put in premium increased by about 3.8 million, but the volume down here was selling. So maybe that was selling of puts. I'm not really sure. But then the net call premium decreased by 1 point, that would be selling cash secured puts, I should say. And the net call premium decreased by about 1.4 million. But if we go back a few days, let's say a week, this does look like a big spike in that net put premium. If I do expand this, this is probably just going to be the day, but then looking back the past 7 days, we can see, with this big increase in net put premium, there's actually a lot of red volume. So maybe that was selling cash secured puts. I don't know. This is really just hopium. The sign here is that this is more bearish than bullish. I'm curious about this one, the $20 call. It looks like the low fill on Friday was 31 cents. The average was 37 and the high was 42. I had sold at 55 cents. So either of those prices are a discount from what I was holding it at. But then interestingly, if I do look at the options data here from Webull and I look at calls over here, as you can see with the January 16th expiration, we scroll down to that $20 strike, we can see that the bid price, which would be to sell, is around 26, whereas the ask is around 56 cents, and that is to buy. So I don't think that, a buy at 56 or 26 would get filled, but I think potentially, 40 or 35 might get filled. So I think that there's some potential there with that. But yeah, that's all that I wanted to cover from the list. And so now I will open up the chat. Sorry for taking so much time, but hopefully that's helpful for you guys. Lots of stuff in the chat here. So I see Sandy Smith, not sure if you're still with us, but she's saying good evening to you as well. Cyberview is saying UVIX is going to drop like a rock on Monday with the China announcement. I assume that is correct, but maybe it bounces a little bit if it's priced in a little bit. But yeah, the UVIX, the VIX, those are going to be pulling back. Those are going to be dropping like a rock. I agree. We're already seeing that with the UVIX overnight down to 35.12 currently. So yeah, I was, expecting, hoping that it would be finding some support here, and that's not the case. It's a small position though. It's fine. I'm just going to chill. I think that even if, this dips lower into this channel, gets back into it, but then bounces, I would be able to get my average down to be able to exit. without any battle wounds or anything, but taking a little bit of profit, I imagine. So I'm not too concerned about it, but I'm not going to be chasing it. Don't want to be chasing a falling knife. So yeah, dropping like a rock for sure. Wag Hana is saying, hey, what's up? Hopefully you're still with me, still with us. But yeah, I just trying to do kind of the overview stuff. It really helps me out a lot, puts things into context. So hopefully it's helpful to you guys. And then I see Cyberview, got a bunch of SVIX, really nice. I will pull that up real quick. I was looking at that just before starting the stream because I did have some. I was buying when the VIX was spiking up here, or I could show over here. I bought too early. My average was around 1380, and in the overnight, hey, if I would have held on to it, I would be approaching break even. If we do look over at the 10-minute time frame, did hit a high of 1380. So yeah, I mean, I probably should have held on to that, but I just feel a little bit uneasy shorting the VIX with the kind of volatility that we've been seeing. But yeah, this could definitely be going up notably higher. So yeah, I mean, I feel like it's a good time to be doing a short-term trade, I would say, with the SVIX, but I'm not going to be chasing it. I'm not going to be going after that one. And then anyone trading gold futures, I think that definitely good to be trading it on the short side. It looks like I don't trade the gold futures. I actually don't know how to, but I did have a gold short in GLL, ProShares Ultra Short, 2x leveraged, I believe. Yeah, 2x right there. I just didn't want to be holding it over the weekend because I thought there might be some volatility and the gold could be going up as a hedge or a safe haven commodity, be doing the risk off there. So yeah, no, I do not have any positions with GLL, but maybe somebody in the chat does. Cyberview, yeah, is responding to that. Nope, I hold lots of gold and I'm going to take it in the behind in the morning. Yeah, one thing actually that, I found really interesting, I'll just pull up the gold chart again. This was, I was chatting with a buddy and he was talking about, we're friendly competition between him and his wife trading, stocks, but, not degen at all, nothing like what's going on over here on the channel, stuff we like to do. But looking at gold over here, like his wife was talking about she has some Apple and it pulled back recently, and I mentioned that, and he was bragging that he was in gold, and it's like, cool, but buddy, I think that you being full of yourself for holding gold, that could be a topping signal. Or maybe it's just a short term. Maybe we need a little bit more consolidation here before breaking into new highs. But we do see the lower highs here. Also lower highs in the RSI. So I think I mentioned this earlier, no bearish divergence. But we do see lower volume there. And so that did suggest some weakness. Yeah, this is going to be pulling back so far. Gold looks like it's down about 1.57% so far for May 12th. And yeah, just coming back to the charts over here. Sandy, I will happily go over Tesla. That is one that I was actually thinking about adding, but I didn't want to clutter the list. And I'm actually going to just write down the ones that I do go over. So I did mention SVIX. I'll add them to the description of the video. So SVIX, just went over gold, and then I will be mentioning Tesla here. So Tesla is actually one that, I hold. I have a small position, like laughably small, I'm sure, but it's one that I just casually accumulate. And I was thinking about on Friday, well, maybe I want to buy a little bit more while it's below 300. I did not. And the reason why is because we have this uptrend here. It looks like it might be finding that as resistance, but now it looks like it's gapping up in the overnight, trading around 313. And, for my small position, I'm accumulating shares by buying fractions of a share. So, it wouldn't be a big deal if I did accumulate a little bit more up here. But yeah, let's look over at the 10-minute time frame to see this. This did, move up. And I can't buy fractional shares in the overnight. I have to wait for the market hours. So, yeah, I mean, if this does pull back to around 300 tomorrow, I would maybe look to add a little bit. Mr. Chart Norris had a really nice chart talking about maybe something along the lines of there being a massive, let's see, I'm just going to remove the drawings, look at the weekly, about there being, yeah, I mean, this is not really a inverse head and shoulders. Let's look at his chart and see. So if I go over here, I'm just going to go to Mr. Chart Norris's page, and I will search for, oops, not D, Tesla. And so let's search for that. I think he went over one. Let's do the latest. I think he put one up yesterday, or actually 2 hours ago. Oh, yeah, and actually this is, I'll come back to this in a second, but from my notifications, yeah, this is me saying, oh, wow, I should have held my GLL over the weekend. Yeah, this he liked this as something I posted a little while ago. I said, don't tell Tim, and that was about his, Tesla chart showing that this is an accumulation pattern, that it broke out from the range, consolidated, forming a bull flag, potentially to be going higher. And so he posted that on April 28th, but let's see what he did post over here. So this was from 2 hours ago on May 10th. So he just reposted it. So really what really happened, Tesla really happened. It's a daily chart before and after, cup and handle breakout. So this is cup and handle on the daily. So let's look at what he has here. And so this is, so this, I forget, I don't know Wyckoff well enough. I do have a book on it I need to start reading, but I just don't have enough time to read. It sucks. But what we can see is, this consolidation pattern here, finding this range where this is resistance or supply because people are selling, creating supply, or here at the bottom, that is support, and that would be demand where people are buying. And so we can see that here with this range over here that he's drawn, the range over here, and then it's kind of an ugly cup, but there's a nice little cup there, and maybe this actually looks like an inverse head and shoulders pattern, maybe with kind of a micro shoulder there. And so he's viewing this as, the move here, that this could be breaking out higher. And he has this level drawn here at 328.97 or 329, corresponding with not the wick low from over here, but the consolidation low. So with the, let's see, open of that candle overlapping more or less with the other candle or trading here, and that then being some resistance. So maybe this goes up. Let's look over at the chart to see where that might be going up to. And that would be based on the low from over here, which would have been, I guess, February 11th. So let's look at the data here. Is that this pivot here, February 11th, look at that, nailed it. And so that's actually the red line that I have here, 330.01, pretty cool. And that also, you want to have confluence of levels, or you want to have a level that really lines up with other areas of the chart. So we can see this consolidation over here, and this consolidation over here, that was prior support. That's likely going to be some notable resistance. So these are the levels, the price action that I suggested could happen with that earnings report video, or before earnings. Did not get the orange scenario, did not get the red scenario, did not get the yellow scenario here, but we did effectively get the green one. I kind of nailed that. So the most optimistic, the best case scenario happened. Don't tell Tim. Don't tell Tim Walls. He might be upset. But what we can see from the overnight trading, or let's actually just look at it from the close and then look at it from the overnight trading. So from the close, getting up to 330, because that's around 300, that's around, a 10% move, not too surprising there. But from 313, so let's just move the bottom up to around 313, right around where we're currently trading at. And that represents about a 5% move to the upside. So what I could see happening is, we were consolidating below this uptrend, that acting as resistance. Now what I could see happening is us finding that red line as resistance, trading between these levels, consolidating before breaking out higher. So I think that Tesla looks really good. So I like it. And just to note where this orange uptrend comes from, it's probably some historical support. It looks like this goes back to the low from April 22nd of last year. And that was right before an earnings report. Big move up, consolidation, another big move up. And then the pivot low, you can guess this date, August 5th. So that's a very notable level. That's actually when I started to build my position on August 5th. And, because I saw this level, I think it corresponded with a Fibonacci retracement, maybe the 618. So let's just do a quick little retracement here. 618, around 189. I think I had a dip buy at 185. I think 185 was the dip buy and the low was 182, if I remember correctly. The low was 182. Nailed it. So yeah, and you can, I'll zoom in on it. You can see 182. Pretty cool. Some of these days, some of these numbers you remember, they stick with you. And yeah, so we are now, bumping into that level as resistance, but it looks like we're breaking out above it. So I think that Tesla looks great, and I could see it, bumping into resistance, trading between around 330 and 300 for maybe the rest of May, and then maybe it breaks higher. Could be bumping into some resistance around the tops over here, kind of like, consolidation highs. I kind of like that. I'm not really referred to that, but just based on the open from Valentine's Day, that was at a price of 360.62, that white line up there. I think that could be kind of like a secondary level of resistance if we do get above 330. And, so do keep that in mind. And then beyond that, then the lows over here around 380. And then beyond that, 400, whole dollar number, 420, of course, because it's Elon and you got to have fun with it, 430, and then back to, all-time highs, 500, I think could be happening later this year. So very excited about that. And let's see, just following up with a Sandy Smith's comment. Do you think everyone is getting hyped about the market and it's going to drop hard later in the year? So what I think, basically last year, I had talked a lot about like shorting semiconductors that were potentially going to be getting into a recession. I think that we're due for it, but I think that what has been happening in the broader market, S&P 500, looking at it over here, this pullback that we've seen, this 20% correction, that is the definition of a bear market, pulling back 20%. And so I think that we could be at the start of the bear market, but I think that we could really not see the pain of the bear market until next year, because I think with like the 4-year cycle with Bitcoin and really just like a lot of my theses are kind of around that, just having a lot more conviction in that. I think that we could see rallies into the end of the year because I think that Trump Bessent are effectively trying to engineer a recession so the pullback is not as bad. If they're successful with that, I think we'll be seeing all-time highs later this year. But I do think that inevitably we do need to be seeing some sort of a correction. Maybe this is what that is. Maybe they've successfully engineered a recession because look at the drop over here. Like I said, that was just over 20%, around 21% to the downside. And then if we look back to, let's see, the pandemic, this was February 2020. This was March, the end of March 2020. What kind of drop was that? That was around 35, 36%, and like the world was ending then. But from there, from those lows, it only took us about half a year, 140 calendar days or 3 months. No, sorry, I'm doing that math wrong. 140 calendar days, so that's 5 months, something like that. 97 trading days. We were able to recover those gains and then some. So this was like the world was ending. What's currently happening is like engineered. So I think that maybe they successfully done something that will allow the market to continue higher before we start to see a pullback. And I think, from like a political standpoint, I think Trump would really like to see, this pullback continues back to all-time highs, and then rallies into next year. Because then when the midterms come around, everybody would be super stoked, and then that would be great for the Republicans. So, I think from a strategic standpoint, politically, something like this would be ideal. But then, the second half of his term, if there is the start of a bear market here, let's see what kind of pullback was this here. So this is 14%. This is 23% to the bottom here. That's around 26%. And so that was over the course of 279 calendar days. And so, at that point, the midterms would have happened. Then this would kind of be in the transition period when, candidates are starting to run for president. And then if the markets start to rally back up to all-time highs, then, that would look good for a Republican candidate. So if this were to kind of repeat, I think that would be a good way for Republicans to remain in power. And so I feel like that's kind of what they're trying to effectively engineer with this. And so whether you're Republican or Democrat, I feel like just strategy, I find the strategy aspect of that to be really interesting. So yeah, I think that there could be a correction, but I'm compelled to think that we could be seeing all-time highs later this year, whether that's with something like Tesla, the S&P 500. More speculative ones, though, I think that those are going to be a little bit risky. So good to be here. Sandy, glad you were able to catch that. So hopefully that was helpful. Now, Hydro Hustler, what's up? Hopefully you like Hydro Hustler is usually there for the pre-market preps in the morning. So glad you're able to tune in for the night. Wolf, I did go over that a little bit earlier, so you can rewind a little bit to check it out. But basically, what I had talked about with Wolf, I talked about a call. Yeah, you're welcome, Sandy. Thanks for sticking around and listening to my rambles and stuff. But yeah, with Wolfspeed, I mentioned that I took profits on a call on this day, sold at 55, went up to 79, could have made more money. I don't have any shares and I don't have any more calls. And then, it's like, well, I just took profits. Maybe it goes higher. Maybe 79 is the top. I'm not going to worry about it. And then it did, test these highs. I'm not going to worry about it. I'm not going to chase. And then it gaps down here, closed on Friday at 328. I wasn't thinking too much about it, but then just like this chart here from Mr. Chart Norris, I'm actually going to pull it up from my profile. Let's see. I had shared this, because I had a $20 call. And actually, let's look at the chart. Why did I have a $20 call? Maybe just because it's an arbitrary number to the upside. Probably because, right around here, we see like pivot highs, 1745, and then 20 is a round number. So, I could see that acting as some resistance around there. We also see the lows over here around 22. So that kind of range, I could see that price potentially getting up to there. The lows over here, 22. Yeah, so that kind of makes sense to me. But this could also bleed a lot lower. And so I could see a bounce. There is this gap fill up here. This break below this green downtrend. That downtrend is based on the lows from over here, which is the pivot low from September 10th of last year, approximately corresponding with like the secondary bottom. So August, let's see, 5th was, well, actually Wolf was green on that day, but it did gap down and then ended up green, but it did continue lower. Over here, this is the low, September 10th. And then over here, almost got to retest that downtrend, but then here, the low on January 14th of this year. And, thinking about, consolidation lows, highs, whatnot, maybe it'd be better for me to draw this trend line based on the closes over here, something like that. But either way, doing it on the low, so being as, getting that trend line to be as low as possible. We still broke below it, but I'm wondering if maybe this is a fake out break of that trend line before this goes higher. Gareth Soloway does talk about Wolfspeed, so if you guys are interested, I'd encourage you to check out his game plan tomorrow. I try to watch him every day, but he might be going over Wolfspeed following this gap down. What we can see from it, I didn't mention this earlier, but I did have this Fibonacci retracement up here. We did pull back to testing, hitting a low on Friday of 313, and now it's bouncing to 336 in the overnight trading. You can see that number right here. But we did test that low. What did I say the low is? 313. We've got the 618 here at $3.10.7. So with that being said, that's, a pretty nice retracement from these highs, from these, lows over here. The 52-week low is, 206. So, yeah, I mean, that's a pretty good retrace. Maybe it could come down to the 786 around 265, but I feel like it's less likely that it would be testing this green downtrend, or at least not in the immediate term. And the reason for that is because of Mr. Chart Norris's chart here. It's the daily chart. And so he has it, I kind of doodled this earlier if you want to see it, but looking at this as like a head and shoulders pattern. And then if you take a measurement, just being approximate, from the top of the head to the neckline, and then transfer that distance from the top to the bottom here, from that neckline down, that's approximately to around $2, corresponding with the bottoms here. So that's that measured move that's complete. We have not filled the gap to the upside here. But he does have this line here at 462, so that might be acting as some resistance, and that corresponds with the lows over here, basically the neckline. And so from current price around 336, that's going to be right around, let's just get a measurement up to, I've got this line at 470, he has it at 462. Approximate, being right around there. But if we go from where we're currently at in the overnight around, I'll be conservative, going from 337.4 up to, what did he say, 62, I believe. That represents about a 36% move to the upside. Maybe it breaks out higher than that, maybe it doesn't, but I think that's a compelling trade. So I don't have a call, which I think I have the data up here. Wolfspeed, $20, January 16th. I like to have lots of months between myself and the expiration, just because I've screwed up a lot on calls recently. I'm going to be paying the price in some GameStop, NEO, and AMC calls that expire in June. Some NEO ones that expire in May. Those are going to zero. That sucks. But, with that, I've got to be learning, and I think it's important to recognize the price that you pay by making mistakes, whether that's literal or figurative, the price that you pay. And so Wolf, I trimmed it 20%. I was happy about that. The highs, though, we can see for this contract, Ed's not blocking it, so that's good. We can see the highs, 75.79 on the second. And then, so, I got out at 55 on, what did I say in this post over here? I said on the 29th. So I got out. Oops, I just want to come over to here. On the 29th, the high was 73. So I could have made, $18 more per contract. But I trimmed at 45, or I exited at 55. I don't know why I said 45. I'm looking at the number there. But yeah, now if we look at this, the high from on Friday, was 42 cents, so $42 per contract, and that corresponded with the high over here on the 9th of 350. So I think that there's a possibility of getting a fill at 40 cents for one of those calls, and then swinging it, for the bounce up to here. Like I said, I like 20% on swings, or on contracts, and so that's something that I'm interested in doing. I'm actually going to circle it here. And I'm just going to note 40 cents, because I feel like that's a nice dip buy level, and that's lower than the average that I had. So yeah, I think that this could be going up like that. That's an ugly arrow. And that's really just based on this post by Mr. Chart Norris. I wasn't paying attention to it until I saw his post here. I really like his stuff a lot. You guys should follow him if you like this kind of, in my view, a very clear setup. Got that level marked there, the arrow there, that's likely to act as resistance. Maybe it goes higher, but when things move, you want to take the risk off the table, not be gambling beyond that point. Maybe have a runner, and so maybe, So anyways, it could turn $40 by buying one contract at 40 cents. into $48. So that's a 20% move. Nothing too crazy, but you stack those gains, you practice that discipline, and start to put more money on contracts once you get more familiar with them. At least that's kind of what I want to be doing. But yeah, so hopefully that's helpful with Wolf, or just that review. And then IBRX. I do have Tesla on the list here, so I did add that. And then I'm just going to add IBRX, which is ImmunityBio Incorporated. And so I'm just going to add that to my list here so I can note that I'm going over it, IBRX. And so let's check that one out. I have gone over this in the past. It looks like, we had this trend line. We're testing it, but then broke below it, got rejected here, but then broke above it, broke out from it, but then just pulled back. And then here, yeah, this, this was kind of like, I'm used to in TradingView, I've got a hold. In Webull, I just click and unclick. But yeah, we see that was a nice little fake out breakdown before, this green candle here when there's like an over 20% move on the day. But then what we see is a more convincing breakdown, a bounce, and a rejection. And then so that's kind of, nail in the coffin there, this breaking down. And then also, let's see, I'm just going to do a casual little trend line here. We did have this support here. And so I would not be surprised if we get another little, bounce like over there, but then to test that as resistance and then get rejected again. So yeah, this doesn't look so great. And what we can see too is trying to look at the volume. I'm not the best at volume analysis, but I'm trying to get better at it. But what we can see is like, where's the notable volume? Okay, so over here, when this is like squeezing up, so over the course of just a few days, this went up over 100%. And so it's not surprising that there was a lot of volume with that. And then the next time we see a big surge in volume was with this, gap down over here. And, I have that level marked by that dashed line at 464. Have not yet filled that gap. Had this big surge in volume with that sell-off. And then following that, have we seen volume competing with that level? So volume on that day, which was December 11th, was 28.65 million shares. What do we see over here? 31.02 million. So more shares traded on this day, and that's going lower. And so, it's like if something's pushing higher and there's more volume behind it, that suggests there's strength behind it. There's volume behind the move that it could potentially continue higher. Let's flip that around. If there's a lot of volume when something's going down, it's like the exact same thing, that it could continue going down. There is volume backing the move. And so let's see, we see lower lows in the stock price, but we actually see it's actually kind of flat in the RSI here. So, well, actually, no, from over here, I'll just draw a trend line so we can see it. We do have lower lows. We did break below it a little bit here, but generally lower lows. And so from that trend line from here, we actually have ever so slightly higher lows. So that's potentially bullish divergence, but a number of times I've covered it, it doesn't always play out. And this has really, just been getting rejected from a number of these levels. This downtrend from over here, maybe it's consolidating to break out, but I would say that a level that we need to see it reclaim we have a gap here. It might be a little bit harder to see. I'm just going to delete some of these that doodle over there because that's already happened, but just this one over here. What we need to see is this gap. So the closing price on May 2nd was 254. Horizontal line there, dashed line, make that thick and blue so we see that there is a gap up there. And that's going to be resistance. People were buying up here, let's say, and then it got dumped. They got dumped on. And if it goes back to their break even, they might want to trim or exit, run for the hills if it does get back up to there. That would also be corresponding with this uptrend that was support over here. And so there's a confluence of levels there right around 250. And so if this bounces, I think we want to be seeing some closes above 250, and we have not seen that yet. So I think that this looks pretty weak. I think that looks like it's probably going lower, unfortunately. And with this having tested the $1 to $2 range, testing the low, 52-week low of 183, just hit. And following the bounce here, big wicks to the upside. And, we did see a little bit of a surge in volume, but there wasn't enough volume to push it higher. So, yeah, I think that if it does get up towards filling that gap, it's probably going to be getting rejected, in my view. Knowing nothing about the company, this is IBRX. Hopefully that's what you, requested there. So, yeah, that's kind of my take on this, that this is not looking so good. Because, what we're seeing is, like a repeat. We have a gap here. Price attempts to get up to it, but can't make it, gets rejected, pulls back, create another gap. Maybe it gets up to there, maybe it doesn't, and then it's just kind of a repeat. And we can also look at this. I don't do this too often. Look at this on the weekly. So this is from, last week. Gap down. Maybe this is a spinning top, big wick to the downside, buyers stepping in, but buyers stepped in with it to close here, not back up to here. So that does suggest a lot of weakness. And this is, more volume of sellers than there were buyers when it got pushed up here. So yeah, I don't think it looks that great in all honesty. But, there's potentially hope if this can fill this gap at 254, but then that might be acting as resistance. And really, I think what we want to see, what would be more convincing that this is going to hold up here is if we can get a close above 263, which was the high on that day, May 2nd. That was, 263. So that's another level. If this can reclaim that, so, while it's to the upside, I'm not trying to suggest that this is a buy level, but if it can start closing above that level at 263, maybe that's the bottom. Maybe it's reclaimed this downtrend. But yeah, I unfortunately, I don't think it looks that great. But yeah, so hopefully that's some helpful perspective on there. And let's see, there's no more chats. So what I might do is Benjamin had mentioned BLNK and FLNC. So I might go over those real quick towards the end. I'll just let him know that I covered them towards the end if he's not here. Benjamin, if you are here, hopefully it's all right if I look at those two real quick for you. And I might just do that from the ticker request live tab over here. So let's look at BLNK and FLNC. And then I also had some requests for plug, which is already on there, and ASTS. So I'll mention those were requests on X, but I might delete ChargePoint, delete Luminar, and delete Tesla, because I already went over that. So yeah, I got these four over here. So Blink, Benjamin was saying he thinks that, it's possible that Blink could be going bankrupt. Earnings preview. So they've got earnings coming up tomorrow on the 12th. I imagine it's pre-market. Let's look over at, Max Payne here, because looking at this in Unusual Whales, I can type in BLNK just to get this information up here. Earnings expected on the 12th in the after hours. And the expected move is a 20% move upside or downside, but that's only a 17-cent move. because it's trading so low here. But what does this look like to me? I mean, this looks like maybe that's a topping signal because this did rally higher. Did put in a big wick to the upside, closed in the lower 50%. It did close higher than the close from Thursday. And so the close on Friday was 83.81 cents, but the close on Thursday was 83.66 cents. So yeah, I mean, closing above that's good, but couldn't close above the high on Thursday, which was 85 cents, could wick above it, but not close above it. Also opened near that level, opened on Friday at 84.90. And then also with getting to these highs, we see that there's a big drop in the volume there. That suggests some weakness. We do see here, it looks like there's a little bit of a trend line of resistance going up. So that doesn't look so great. And actually, something that I might do, I'm thinking, you know, can I copy? I wish I could just create another parallel line like that without doing the parallel channel, but because that extends forever, I believe. But maybe it doesn't. Maybe I'm misremembering it. But yeah, if I just do, you know, kind of casual parallel channel here, maybe I can adjust the settings. I don't want it to extend, but yeah, it has to extend. But yeah, I mean, so that looks like a little bit of a channel there. And since it extends forever, I might actually just do a trend channel. So I'm going to do it going from April 9th to, I'll just extend it out into the future. And so I don't really need those thick white lines. So I'm just going to do it like that. But what does that kind of look like following this downside move? Kind of looks like a bear flag. And with the earnings coming up, maybe the price action's strong tomorrow and this rallies higher. Maybe it closes above Friday's high, which was 87.85 cents. And I'm seeing another request there. I'll add that to the list in a second. But just finishing up here with Blink, I am curious, just to, you know, following this consolidation here, I'm curious from here, Fibonacci retracement down to the lows. We did go up to the 50% retracement. That suggests, that makes me think that that could be some resistance. Also, looking over here at the lows, that would actually be more like the 618 that's around 90 cents. But that is probably, you know, going to be some resistance over here. And so I would say that's probably like a red line going across there. So yeah, I mean, there's some notable levels of resistance above us. We also have that light blue downtrend, which, what's that based on? That goes back in time. That goes back, I think this is when I first started covering it. And that was the lows from March 22nd of last year, consolidated around there, acted as support, then bounced from it over here. This is the lows from August of last year. Bounced, but then broke below it, consolidated around it. Maybe it's not such a notable level anymore. This was not an inverse head and shoulders, unfortunately. And yeah, I mean, there's just a lot of levels there, so I might actually clean some of them up. Clearly broken below those. This line here I can delete. And this I can delete as well. Yeah, I mean, this is just, these are things that did not happen. This did not happen. And so, yeah, we then broke below that downtrend, and now that's above us. Corresponding with the 618, also got this 50% that looks like we're rejecting from. Another thing that I can do is, rather than a Fibonacci retracement, which would be suggesting levels that could be going back to, we could do a Fibonacci extension, which would be suggesting that this would continue to the downside. And that is really just going to be based on this looking like it's a bear flag. And so from that high that is from March 19th, then coming to the low from April 9th, and then bouncing up to Friday's high, which, let's see if I can get that right, is right there. We can then see what the 100% level would be, which is effectively just taking the measurement from here, that same distance, but then extending it down from the high over here. And so that would be suggesting a price. We can see the confluence of those levels at around 42.43 cents. So this is that measurement that I did. If I delete that, we then see that 100% from that Fibonacci extension around $42.43. That's about a 50% drop. So that's possible. So just be cautious of that. But it's also possible that with earnings, this could be breaking out to the upside and then reclaim that downtrend. But if it's a downtrend, it could hold that downtrend as support like it did over here. But then that didn't lead to a good future. You know, it's down more. So good to be cautious with Blink. And so then I'm just going to go over, because Benjamin also requested it. So if he does check this out, he can then also look at FLNC. So this one, this is tough. I mean, it closed below 5. That's what I was looking for. Closed for the week above 496. Closed below that, got a notable rejection here, closing at 458. But what we can see is like kind of the consolidation over here. We can just draw a horizontal line. Let's do it from the pivot high from May 1st. And so that does have overlap with like the highs from May 2nd, the consolidation over here. I think that would be acting as some more notable support. And actually, maybe we could get some more beefier support down here around 435, let's say. I previously had it around 445, but let's move it back down to around 435. I think that could potentially be a level of support, and it's possible, again, this is potential hopium, and maybe I want to clean up some of these drawings. But, you know, it did do what I had suggested there, so I'm just going to delete those. It did not do this yellow one. But what I think is potentially going on is maybe we have a cup here, and maybe we form a handle if it pulls back to 435 before. That's a crappy doodle. But yeah, let's just do this again. You know, this is a cup. Maybe it's starting to form a handle, pulling back to 435, and then it goes back. We want to see it retest. Sorry, I'm going to take a step back so I can doodle this out so we can refer to it later. But yeah, I do think that $5, that's going to be pretty notable resistance. And it did get rejected from that. The high on Friday was 493. The high on Thursday was 490. If I said 593, I meant 493 for Friday. So yeah, just below 496, so that doesn't necessarily look that good. But if it can form, you know, the cup here, consolidate over here, form that handle, and then break above and retest, that could be a sign that it's going higher. So there's still some hope. And so I just look for a pullback to 435. If it breaks below that, though, then I think it's going to be retesting the lows over here around 350. And yeah, I mean, I think that it's good to be cautious. But I think that this chart looks better than Blink, which I feel like matches your sentiment. Feeling a little bit better about FLNC, but still, I mean, it needs to reclaim $5, and that has not happened yet. So I would be cautious with that. Ooh, but the night trading, the overnight, let's look at this 10-minute time frame. Looks like it's gapped up, I believe, but there's really not that much price action in the overnight. Around 478, that's right around that red line. So it's currently trading right around this red line. So basically, reclaiming some of what it lost, you know, based on the open price, I guess I should say, on Friday was 475 effectively. And so it's trading right around there, 478 in the overnight. But it's overnight trading. And yeah, so this is a smaller market cap. It's less than $1 billion, but maybe that's mid market cap. I'm not sure what size that is. But yeah, so very cool there. And so I do see the request from Dying to Live or Dying to Live. Dying to Live. And so that is, let's see, I'm just going to kind of like number these that I've gone over so people can refer to them. And then so RKT will be next. And so I'll just pull that up. And I should note it is a half an hour past my bedtime, so I should probably be winding this down. This is Rocket Companies. Is this real estate or is a financial technology company consisting of mortgage? Yes. Cool. Mortgages, real estate, whatnot. And so Rocket, ticker symbol RKT, closed on Friday at a price of $11.11. Maybe that's a good omen, sign that, you know, repeating numbers. Maybe not. Maybe those are like 4 claws. So maybe that's bad. But you know, this is up in the overnight around 3% after pulling back to that close on Friday, pulling back by about 4.64% on the day. Does look like it's put in an inverse hammer, so maybe that's a bottom signal. And this actually reminds me of, you know, if you like think about charts, you know, invert them to try and get an idea on them. So like if this, I can't, maybe I want to, I'm not going to, there's not enough time. But, you know, if this was going up, like, so if the moves here were going up and you saw this kind of pattern, that would be like a hanging man, so that you have price action going in one direction, you have a hanging man. That suggests there could be a reversal. And so with this being an inverted hammer at the bottom, maybe there's a reversal to the upside. Although, you know, with that big wick to the upside closing at the lows here, that doesn't give me too much confidence in it. And this does seem like there's some consolidation following this downside move. And so if I do like a Fibonacci extension from the highs from April 23rd, and then go into the lows that we hit on May 7th, and then bouncing to the highs that we hit on Friday, so May 9th. This is a little bit premature, but if that is, you know, downside consolidation, and, you know, I could even make this, actually, I'll do that after I show you where this goes to. This is going to be potentially going to 100% extension is around $10. So maybe this could drop around 9% more to the downside. But if I do adjust this over to here, maybe that's 1027. So maybe that's a little bit better, more conservative with that. But we do have maybe some good news, maybe some support. The lows over here, 1097, 1094. Those are the, let's see, the 52-week low is actually 952. So that could be going lower. If this is, you know, let's see. I'll leave those levels up here, but I might, I'll make that yellow because I'd say that that's a cautionary level. But what we have done is if I just draw a pretty casual trend line here from the lows here to the lows over here, you know, we're breaking the higher lows. We've been breaking the higher lows. Broke below. But we're still putting in higher lows relative to this low, but that's only 2 here. That, I mean, this doesn't look so great. But maybe there's higher lows there. Yeah, because I mean, like, extending this up, you know, there is a trend that it was respecting, broke below, got an attempt to get higher, but couldn't hold it, and then now it's trading below that trend line. So I don't think this necessarily looks so good. I think that this could be revisiting 10, but maybe it's putting in a higher low on the shorter term here from that low of 1094. So if this doesn't close or doesn't test 1094 tomorrow, if it doesn't wick down, doesn't matter if it closes below, if it just wicks down to 1094 or lower, or I should say if it wicks down to lower than 1094, maybe that's a breakdown of this. Maybe it's coming to 1027 or maybe $10. So I'd keep that in mind. And so I have not gone over FNGR. I do need to be wrapping up the stream though. I'll do that real quick. Hopefully that's helpful. My perspective on Rocket. I think it looks a little bit risky, not so strong right now. But yeah, FNGR is FingerMotion. This sounds dirty, in all honesty. This is, what kind of company is this? Is a mobile data specialist company. FingerModio's business, telecommunication product services. What country is this in? I feel like this has to be in a different country. China. China, I think that's really risky. Maybe it could be good with what's going on in the market right now. And I have to say, the weather's been really nice where I live. It's been nice to be outside, but there have been a lot of bugs out. I was just noticing I got a little bite on my wrist. I hate where I live, to be honest. It's either bitter cold in the winter or too hot and humid, or there are a lot of bugs out. It just sucks. It's some aspects of where I live is nice, the Midwest, but like it's cheap. But yeah, so FingerMotion here, 350. What we see here is higher highs in the stock price, lower highs in the RSI. That's bearish divergence. Getting the move up higher. We do see much lower volume compared to what it was over here. So this is looking a little bit exhausted. The highs from Thursday, the high from Thursday was 350. The high from the 5th of May was 351.5. Didn't get a close above that, but did get a close above the high here. I think it looks kind of weak. I think it looks kind of exhausted. It has had a, from the lows over here, let's go, almost a 200% move to the upside. So yeah, I mean, you could think that maybe this is a bull flag, maybe this is going higher, but I think it looks like it's probably getting exhausted, would be my take on it. And yeah, I mean, I've got this uptrend. What's that based on? That actually looked kind of notable. Yeah, I don't know when I drew this. But going back to the lows of 62 cents, those were the lows from 2022 before it had a massive rally. Insane. Would have loved to be holding it down here, selling up here for a 14, almost 1,500%, 1,000, almost 500% move to the upside. And then, came back, basically forming that trend line, retested it over here before another big move, then retested it over here, trading below it, and now we're above it again. So I could see it at a minimum pulling back to that trend line and then maybe bouncing, but it could, pull back and then break lower. From the lows over here, so I'm just going to do this to like the extreme. From the lows over here around 103 to the highs hit of 352. I think I got that marked right, but I'm just going to check 350. So I'm just going to adjust that to 352. We got the 50% retracement down to here. That's around 228. And then the 382, the 236 probably corresponds with over here. Yeah. So that's around 290. So I could see this pulling back to around $3. So I'd be prepared for at least a pullback to 3. And if it finds that level of support, then I think that's great. It could be going higher, and you want to see a V-shaped recovery. If you see it consolidate around that level, so do something like this, that then becomes a bear flag, and then this is likely to break lower. Oh, hey, Jeff, thank you. No problem. I just got a super chat, so I really appreciate that. I'll just heart that. I don't get those too often. I do appreciate it. And yeah, so I mean, I would just be prepared for this to pull back to around $3, see how it responds to that. Does look exhausted though, kind of a double top there, lower volume, bearish divergence. And also like the MACD, it's been kind of flat here. And so maybe it's, getting exhausted, going to start pulling back. And actually, I meant to put up some moving averages. Those are all well below us. So yeah, I mean, this is definitely overextended. So good to be cautious with it. And if you're up on it right now, you don't necessarily need to sell. I'm not trying to tell you to sell, but it might be a good idea to at least trim just to take some risk off the table so that if it does pull back, if you believe in the company long term, maybe you could buy those shares back a little bit cheaper, whether that's at 3 or maybe 250, 260, somewhere around there. So hopefully that is helpful. And then, yeah, at the end of this, I am just going to go over Plug and AST SpaceMobile. I know it's SpaceMobile, but I like to say SpaceMobile. It makes me happy. But yeah, so let's go over Plug real quick. What I've doodled here, I did have a position in Plug. I sold at a loss at around basically 85, 86 cents. Sold some at 80, sold some, I believe, at 90 by covered calls. And so my average sell was around 85 cents. And I think my average was around $2.09 or maybe $1.98. I'm not sure, around $2. So I lost, some money on it, but I only had 200 shares, so it wasn't a big deal. But I just feel like I've seen so many charts where there's a downtrending level of support. This reminds me a lot of Fisker. And, just now it's breaking below that. Maybe this is a dip, like a spring, and that this is going to be going higher. That's a possibility. There's earnings for Plug tomorrow after hours. I feel like I went over Plug already. But maybe I didn't. Blink, that's tomorrow after hours. So Plug, let's see when Plug's earnings are tomorrow. Plug usually does them in the pre-market. Am I looking at the right chart? Yeah, it says earnings tomorrow. Earnings week ahead, Plug. So let's actually just look at their website real quick. Plug Power Investor Relations. I don't want to resume browsing. I just want to go over here. So investor relations, let's just pull up this tab here. And we can see events and presentations. So scheduled event here on the 12th. What is that event? It's the first quarter 2025 earnings call tomorrow, May 12th. Let's just open up that webcast so we can see that's in the after hours. So if you guys want to tune in to Plug Power, I'm not going to be streaming it, but you guys can at least listen to their call. And but yeah, I mean, for me, I can't be spread so thin, so I exited. But yeah, I mean, there's the possibility that this doesn't happen. It doesn't get rejected from around 90 cents. Excuse me. This reclaims that level, reclaims the downtrend. But I feel like it's just looking a little bit concerning. And with it having traded, let's see. Let's go back in time. 30 days. This closed back here, 29. So this was above 40, $1.40. But when did it break below 1? I mean, the reason why I'm going back 30 trading days, which might be calendar days, I'm not sure, is I'm not sure if it's whether it's the NASDAQ or the New York Stock Exchange, but if a stock is trading below $1 for 30 consecutive days and closes a month below $1, it is no longer compliant and it gets a notice that it needs to reclaim $1 or it risks being delisted. And so I feel like that could be happening with Plug. Plug has a much longer history than a company like ChargePoint, so I feel like there's more hope with it. But I do think that this is my thesis. I could be wrong, but this is my thesis based on I want to have less risk on the table. I want to have less exposure, and I feel like this is one that I can live without. So yeah, but if it reclaims 90, closes above 90, that's maybe a sign of strength that it's starting to move higher. So that could potentially be good. And then ASTS also has earnings this week, I believe. Let's see what this little earnings thing says here. Earnings right here on the 12th. Wow. So let's look at the data over here, ASTS. Earnings expected on the 21st, so not the 12th. I don't know why it says that's estimated. But yeah, it says from Unusual Whales that earnings expected on May 21st in the pre-market, and the expected move is about 17% either to the upside or downside, which would be about $4.35. I think this could look like it's a bull flag, that it could be breaking higher. But I also think that bigger picture, this could be a bear flag because this is downside move consolidation. This did look like an inverse head and shoulders pattern that broke to the downside. We did not continue lower though. And so what we can see, and this may be just a little bit of an experiment, we can do some Fibonacci extensions to see low, high, pullback. 100% was up here. Okay, so that's some resistance. We can do this again from the low, high, pullback. Hey, so I think that it's getting rejected from a level that's actually pretty notable. And so that is just, you know, the moves that it has here. So from this low to this high, it's about 36% or really $6.67. Glad it's not a 6 at the end there because that could be a bad omen. But then, you know, we move this over and we see that's the same distance. From that pullback, that's that measurement, that's that 100% extension. But then we do the exact same thing from here and go up to, actually that's weird. Why did this other one? Oh, because that's a different distance. It's going to the high here. So that, about 495, 490. That's the move there. So that's a measured move, multiple measured move, or not measured move, but 100% extensions, 2 of them that both line up around 27. So that seems like notable resistance. I think that 27 is super important and it's not been able to get above it. Did get rejected from it here with higher volume, has been consolidating here with lower volume. So that's potentially a good look. If this is to basically do the same thing again, a 100% extension to the upside, that could be putting us at around $29 to $30. So based on these two, this extension here where you see those blue dots, or this extension here where you see that there. But then this is both of those. So 30 plus or minus 1, I would say, is where that could be going if it goes to the upside. But 27 does seem like it's some pretty notable resistance based on those extensions. And there's also just a lot of consolidation over here in that range, corresponding with some lows here. So yeah, 27 needs to be getting above. But yeah, I'm pretty tired and I need to get to bed before work in the morning. So I'm going to be winding this down. So I'm just going to throw this up here because if you did like the stream, if you do like pre-market preps, kind of merging that with Ticker Request Live, make sure you like the video, share your thoughts in the comments down below. If I don't respond to them soon, I'll try to respond to them later. And then, yeah, trying to go over the requests here, doing it live. And I will be doing another pre-market prep tomorrow evening because I'm working mornings. But I'll probably limit that one to be an hour long at most. Otherwise, I'm just going to be dead by the end of the week. I'm just going to be exhausted. So got to manage the sleep schedule. But yeah, I will add all the tickers that I went over into the description, and then I will also post it on X. Unfortunately, I won't have timestamps, but you guys can scroll through it and see them in the order that I go over them. But yeah, hopefully this has been helpful, and I'll see you guys again tomorrow evening if you want to join. I will be doing that at 10 p.m. Eastern, but probably just for 1 hour at most. But yeah, thank you so much for joining. I hope it's a great start to the week for you guys, and I hope you're excited. I definitely am. Yeah,